Welcome to the Deep Dive, your express ticket to becoming truly well-informed quickly and effectively. Today, we're really diving headfirst into the exhilarating world of rapid-fire trading. Our mission, it's simple. Unlock the secrets of a powerful one-minute scalping strategy, really designed for speed, for efficiency. Think of it like learning to, snag those fleeting opportunities in a fast-moving river. It's kind of a shortcut to capturing small, frequent gains. And hey, before we plunge in, if you're finding these deep dives helpful, make sure you hit that subscribe button for the EchoTrads channel. You really won't want to miss what's coming next.
That's right. The allure of scalping, it isn't really about hitting that one massive home run. It's more about consistently accumulating those small, precise wins, leveraging tiny movements in really liquid markets, crypto, Forex, indices, you name it. The challenge, of course, is cutting through all that noise. But what's really fascinating here is how just two specific indicators, when they're tuned right, can simplify what seems chaotic, turn it into a clear playbook.
Absolutely. And our mission today really is to break down exactly how this strategy works, step by step, so you can grasp the mechanics, the thinking behind each move. We're talking practical stuff here. Okay, let's unpack this. Let's start with the foundation, the core tools for this strategy. We're focusing on two indicators. Each one plays a really vital role. First up, Supertrend. Now, this one is your primary guide, right, for identifying the trend direction.
Exactly. It paints a green line below the price when things are generally moving up. That's your bullish signal. And then a red line above when it's heading down, indicating bearish. It's designed to be super visual.
Okay, clear visual trend.
Yeah.
But for scalping, you need speed.
Speed is everything on the 1 minute. That's why the default settings, well, they just won't cut it. You've got to adjust it.
Wow.
We're talking an ATR period of 5 and multiplier of 1.5.
Okay, ATR 5, multiplier 1.5. Why those specific numbers?
Right, so the ATR period average true range looks at volatility over previous candles. Setting it to 5 means it's only looking at the last 5 minutes. Super reactive. And the multiplier of 1.5. That defines how far the line is from the price. A tighter multiplier keeps it really close, much more sensitive. This hypertuning lets it pinpoint those brief, explosive moves that are perfect for scalping. Filters out noise you'd see on longer time frames.
Wow, okay, so it's not just using Supertrend, it's surgically tuning it for this time frame, like building a highly sensitive radar. Now, the second tool is QQE MOD. If Supertrend gives us the trend, how does QQE MOD fit in? What's its job?
Think of QQE MOD as your momentum confirmation. Supertrend points the way. QQE MOD tells you if there's enough oomph behind it, enough buying or selling pressure to sustain the move, even for just that brief scalp period.
Okay, so it confirms the power behind the trend.
Exactly. For scalping, you'll want to set its RSI length to 6. Again, a shorter length means it reacts much faster to immediate price changes. Crucial on the 1 minute chart where momentum shifts constantly. Now, smoothing, you can stick with the default, or some traders like to reduce it slightly for even quicker signals. Bit of flexibility there.
So combine a super responsive trend filter with a quick fire momentum check. It's the synergy, isn't it? How they work together. That's where it gets really interesting.
That's exactly it. With these tools tuned just right, the trade setup becomes, remarkably clear, almost like following a recipe. Let's walk through the exact steps for a long trade first. Catching an upswing, there's a checklist.
Right, a checklist. So what's the very first thing you need to see for a long trade? The primary signal.
Condition 1. Supertrend must signal a bullish trend. You'll see it flip from red to green, moving below the price. That's your initial green light. Tells you, okay, potential long opportunity brewing here.
Got it. Supertrend green. Check. What's the next critical piece? How does QQE MOD confirm this?
Okay, once Supertrend is green, you immediately look down at your QQE MOD. For a long, you need the blue line to cross above the white line. That signals increasing bullish momentum. But here's the absolutely crucial part for scalping. Both lines, the blue and the white, need to be clearly sloping upward after that crossover.
So not just the cross, but the upward slope on both. That shows conviction, right?
Exactly. That upward slope confirms strong, sustained upward momentum, not just a quick blip. If they're flat or pointing down, you ignore it.
Makes sense. Now, I know some people like extra confirmation. There's an optional filter, the EMA9.
For sure. You can add the EMA9 exponential moving average, period 9. If you use it, you want to see the candle close above the EMA9. It's not strictly necessary. The first two conditions are powerful. But yeah, it can act as an extra filter, helps weed out potentially weaker setups, adds another layer of confluence.
Okay, so recap. Supertrend green, QQE blue, crosses above white, both sloping up, and maybe a candle close above EMA9. That's the entry trigger for long, but this is fast. How do you protect yourself? Stop loss for a long trade.
Crucial question. Your stop loss, your insurance. For a long trade, place it just below the green supertrend line, or alternatively, slightly below a recent swing low. The supertrend line is often good because it adjusts dynamically, but you place it immediately on entry. No hesitation. On a 1-minute chart, things move too fast to wait. Discipline is key.
Right, that immediate placement sounds vital. What about taking profits? How do you get out cleanly?
Couple of good options here. First one is simple. A quick fixed target. For a 1-minute scalping, aiming for maybe 0.3% to 0.5% profit is pretty standard. Small wins, but they add up fast over many trades.
Okay, fixed target. Set it and forget it. What's the other option? Maybe letting it run a bit more.
The second, more dynamic way is using the QQE MOD again. You'd exit when the QQE lines flatten out, that signals momentum is fading. Or, even more definitively, when the blue line crosses back below the white line, that's a clear sign the upward push is over. Time to lock in profits.
Okay, that gives you options depending on the situation. Now let's flip this. What about going short? Riding the down currents.
Yeah.
So what does this all mean for going short? Is it just the mirror image?
Pretty much. The beauty is the symmetry. For a short trade, condition 1 is supertrend must flip red. It needs to be above the price action. That's your primary signal. Market bias has shifted downwards. Potential short opportunity.
Supertrend red. Got it.
Yeah.
Then we look to QQE MOD again, but the conditions are reversed.
Exactly right. For short, you need the QQE MOD's blue line to cross below the white line. Signal of increasing bearish momentum. And, just like the long, the vital part, both the blue and white lines must be clearly sloping downward after the cross. Confirm strong, consistent selling pressure, not just a quick dip.
Downward slope on both lines, okay? And the optional EMA9 filter for a short.
If you're using it, you'd want the candle to close below the EMA9. Again, just extra confirmation. Confirms price is respecting that moving average as resistance. So once you have supertrend red, QQE blue below white sloping down, maybe candle below EMA9, that's your short entry trigger.
Makes sense. And risk management for shorts. Stop loss placement. Still crucial, I imagine.
Absolutely paramount. It mirrors the long side. For a short trade, stop loss goes just above the red supertrend line, or slightly above a recent swing high, protects you from sudden reversals, contain the losses. Essential for scalping consistency.
Right above supertrend or a recent high. Got it. And taking profits on shorts. Same options as the longs.
Exactly the same options, just applied to a short position. You can use that quick fixed target, 0.3% to 0.5% profit, bag the small win, or let the QQE MOD guide you out. Exit when the lines flatten, or, more clearly, when the blue line crosses back above the white line. Signals the downward momentum is fading.
Okay, so we have the mechanics down. But, if we connect this to the bigger picture, applying this effectively isn't just about the indicators, is it? Not at all. Context is key. One of the biggest pro tips is timing. This strategy lives and breathes on momentum, so it thrives in high-volume sessions. That's a really important point. Liquidity and volume are everything for scalping. So, if you're trading Forex, you'd focus on the London or New York sessions, right? When things are really moving.
Precisely. Or for stocks, target U.S. market hours, especially near the open or close. That's when you get the volume, the cleaner moves. Trading during these times increases your odds, minimizes slippage, gets you better fills.
And the flip side, what should you absolutely avoid?
Avoid low volume, sideways, choppy markets like the plague. Seriously. This strategy needs direction. In flat markets, signals become unreliable. Price whipsaws. It's just frustration and usually small losses piling up.
Right. Trying to scalp a flat market is just asking for trouble. Now, you also mentioned adding confirmation, combining this with other analysis.
Yes, definitely. For higher probability setups, think of it as building a stronger case for your trade. While the indicators give clear signals, adding confluence from basic price action like trend lines or breakout structures can really boost confidence.
How would that look practically?
Well, say you get a long signal from Supertrend and QQE MOD. If at the same time you see price breaking decisively above a key resistance trend line, or maybe popping out of a tight range, that's extra confirmation. The breakout validates the directional bias the indicators are showing, makes the setup stronger.
Okay, so using price action patterns to confirm the indicator signals adds another layer of conviction.
Exactly. It helps you filter for the really A-plus setups.
This is incredibly valuable stuff. You're getting a ton of insights here, folks. And if you haven't yet, seriously, take a moment to subscribe to the EchoTrads channel. There's so much more to explore you don't want to miss out. So, wrapping this deep dive up, the core power here seems to be a fast, Pretty effective 1-minute scalping strategy using just 2 indicators, but configured very carefully. Hopefully this knowledge helps you feel, better informed and practically equipped.
And it really raises an important question to think about. How might understanding the interplay of just a few precise indicators combined with disciplined execution, how might that transform your whole approach, especially in these super fast markets? Maybe it encourages you to look for that clarity, amidst all the noise, and find opportunities where others just see chaos, something to ponder.
That's a great final thought. Okay, that's our deep dive for today. If you found this helpful, please remember to subscribe to the EchoTrads channel for more insights like this. We really appreciate you being here. Thanks for tuning in.